Okay, hello everybody. Welcome to the clickbaitiest of clickbait channel called Korean Atlanta Mentorship. And in this video, we're going to do another velocity banking review clickbait. Lots of money. OMG. Is that like 12 exclamation points in the thumbnail? Maybe. So that's what we're going to review today. Velocity banking, clickbait, something about paying off debt. Okay. So if you don't know who I am some random dude on the internet who paid off a mortgage in 2 years and 9 months. And yeah, I think I've said that almost over 100 times with over 1,000 videos on this channel. And so when you say it over and over again, it kind of just you just kind of get used to it, right? Pay off a 30-year mortgage in 2 years and 9 months, and you wake up and you realize, wow, I really did that, didn't I? Or is this clickbait? Or is this all just some sort of a scheme where I want you to increase my watch time so I can make about $200 a month? Actually, it's becoming less. I don't know what's going on, but my watch time has been kind of decreasing lately. Maybe people are sick of me saying 2 years and 9 months, or maybe they get scared off when I say I'm a cult leader. Either way, yeah, so we're gonna do another velocity banking review, but I did pay off my mortgage in 2 years and 9 months, and I'll let you stare at this screenshot that I have, and talk about paying off debt. By the way, I need more Nintendo Switch 2 games. Like, I didn't realize when I bought the system, there was only, like, 3 games for the console, and the rest were, like, Nintendo Switch 1 upgrades. Did anybody else realize that? Like, I bought Mario Kart World, or I bought the package that came with Mario Kart World, and I was like, "This is, like, the same thing as Mario Kart 8." And Mario Kart 8, how old is that game? Like 10 years old or something like that, or more than 10 years old? That was a long-lasting game, so I don't even know, like, what the difference between Mario Kart World and Mario Kart 8 is, but that's what I've been doing. And you know how I know, like, I'm rich, or at least I'm pretending to be on YouTube? This is what I heard a while back. I didn't come up with this, but the way that you know you're rich is when you enter a store and then you buy stuff and you don't remember how much stuff costs, right? I remember I told this to someone. I actually wanted to mentor. I was like, giving my most insightful comments, and that person was like, "Uh, "Yeah, right." You ever have that? I guess people. I don't know what it is, but people do that to me all the time. It's like you think you pay off a mortgage in 2 years and 9 months, and, people would be like, "How did you do that?" But in my case, I'm just telling you my experience. Most people act like they didn't hear me, but I know they heard me. You ever experienced that too? I don't know. It feels like everywhere you go, people got on the poker face, but I don't need to put on a poker face. Why? Because I could just I paid off a mortgage in 2 years and 9 months, and I'll just tell everybody and see who's the lucky person who's gonna ask me, "How did you do that?" How did I do that? I don't know. Okay. But let's go ahead and review velocity banking. So what is velocity banking? All it is a debt payoff strategy where you throw all of your money into debt with the help of something called a line of credit. I remember when I first learned this strategy, I had no idea what a line of credit was. And then it turns out a credit card's a line of credit. I was like, "Oh, I didn't know that." But then you never hear the term line of credit unless it's like a home equity line of credit. And then back in the day, I had no idea what home equity was. I was like, "What's home equity? Price of the home minus price of the or the pri the estimated price of the home, or the value of the home minus how much you owe." I was like, "That's equity? Sounds a lot fancier than I thought it was," right? And then I found out that with something called a home equity line of credit, you can use your house as a giant credit card. I was like, "What?" But it's many ways more advantageous than a credit card because the interest rates are cheaper and you could probably get more money, right? So, yeah, so that's what I kind of did, right? Line of credit. That's what you're gonna need in introduce velocity banking stuff. And yeah, so we're gonna do high income. I always like doing high income scenarios because I feel like debt is not for low income people. Unless you're doing like payday loans at like 500%. You ever watch like Caleb Hammer? And he has those people on his show where it's like, "I got a 500% loan to go on a trip." I was like, "That is crazy." Okay, that's crazy. But yeah, we're gonna assume that we have high income because who's the bank's favorite customer? Is it a low income person or a high income person? It's a high income person, and their favorite customer is a high income person who does not need money. right? If you go to a bank and you make lots of money and you don't have any debt, they're like, "Whoa, like this person doesn't need money and doesn't have any debt. Let's give them some debt offers, credit cards, mortgages, the whole shebang. We got to give it to them." And then what happens is that they entice you with these low payments, right? Every debt product, the way that it works and makes money is that it's split out in low payments over time. So once upon a time, you didn't have any debt, right? And then you decided, okay, I'm going to borrow this $30,000 credit card and the max payments 1050 a month. That's a pretty sweet deal. And then you get another credit card and then you get another credit card, right? And then you get an auto loan, a student loan, or maybe you get the student loan first. I don't know. And then you get a mortgage, right? $500,000 home for $2,000 a month. And then that's how they get you, right? Because the bank is like a vampire. See, when you have lots of money and lots of money, no debt, that's like a person with fresh full of blood. And every single debt that they offer you and accept is like your blood being taken away. And so when you have too much debt, that's like your blood's been drained, right? The bank is like a vampire because what kind of product are they actually producing to sell to you? Not even an iPhone or a technology product, right? It's just paper. So what you do, okay, is you want to make sure that they're not sucking the life force out of you. And the way that you do that is just not making small payments over time over every single thing that you borrow, especially the mortgage, right? The 30-year mortgage is like it's a death trap. Okay. So what you do is instead of following the traditional banking model, and I'm not giving you advice because I don't give financial advice to anybody, but I'm saying if you're going to do this thing called velocity banking, what you're going to do is put all of your money into debt, right? And this is very scary for people because if you have the same income and the same expenses, okay, I'm going to do this. Having zero savings scares the daylight out of most people because what do most people say? Like, you gotta save $1,000 or you gotta have 3 to 6 months of savings. But if I have all this debt, why not just use it to attack it and use the line of credit to be able to attack it with the ultimate flexibility, right? Like, one of the reasons why people have such a hard time putting all their money into debt, it's like, what if I need it? Right? Like, what if I put all of my money into my credit cards? Well, how do I pay off my auto loan, student loan? Because they don't accept credit cards. Well, they do, but for a fee. But that's why you need either a home equity line of credit or personal line of credit. And if you're a business, use a business line of credit, right? So if you've never seen a home equity line of credit, this is my current home equity line of credit. It used to be 280, and then I said, you know what? I need a little bit more. And I got $373,500 lines of credit, and, I remember when I signed for the 280 line of credit, I was, like, feeling like I could snap my debt in half, right? And so, yeah, this is my home equity line of credit. Basically, what a home equity line of credit is that the bank will allow you to access funds based on the value the ho your home equity, right? And I was like, "You can do this?" And then, and so I was like, "This is like a giant my house is just a giant credit card in disguise." Right? Like, I came to that realization that these products actually exist where your home is a giant credit card in disguise. And they charge you, from 7.5 to I think 11, 12%, 18% max by federal law. Like, they have a law that says you can't charge more than 18. I was like, all right, I'm going to get a home equity line of credit. And instead of using my checking account as my main operating account, right? So basically, what does that mean? Is that you pay for things on your checking account and then you leave the rest there. What we're going to do is we're going to dump all of our paycheck into the line of credit and then take out what we need from the line of credit to pay our expenses. But everything, all of our cash should be used to attack debt, right? So that's the really difference between someone does traditional banking versus velocity banking, right? So with traditional banking, the checking account is like the final destination of the money. It's like, oh, I gotta pay credit cards and bills. Ew, like I'm trying to keep as much money in my checking account. Whereas with velocity banking, the checking account is like the intermediate destination. Your money doesn't stay there. It's just meant to let's say receive your paycheck. But once you get that paycheck, as soon as it hits your checking account, it's gone. So you see like something like this, 19 grand comes in and then 19 grand comes out, right? So let me go back here. So that's kind of like the difference. And here's the thing, like I know some of you are looking at this and thinking like, "Hey, if I made 13 grand a month, like I would never be in this situation." That's actually not true because bank's favorite customer is someone who makes a lot of money and doesn't know how to manage it, right? Bank's favorite customer is not like poor people. Like they don't like poor people. Like if you ever look up like articles in the past, it's like, why can't poor people get bank accounts? Because banks don't like them. I know it's kind of cruel, but I'm just telling you the truth, right? Like they just lie to you all the time so that you can kind of think have a good image of them. Because what does bank marketing do? Bank marketing always shows you like, oh, like we support our farmers or small businesses, and so you have always have like an image of like the heartland or maybe like a cafe or something like that. It's like we support our small businesses, and then they just lie to you about who they lend to because what they always say is like, "Oh, we'll be there for you when you need us," which is not true. And why is that? Is because banks don't lend money to people who need it. Like, you want to know something about me? If this is your first time in the channel, I have over $731,000 in lines of credit. 731,000. Every time I say this, I don't believe it. I remember like first time I got like a $5,000 credit card, I was like, "Whoa, they give away $5,000 credit cards." Now, if I apply for a new credit card and I don't get 10 grand up front, I'm like, that's so small. When did I become a size queen? Wink, wink. But yes, $731,000 in lines of credit. $731,000 in lines of credit. And how did I get all this? Right? How did I get all of this? And this was my new personal line of credit that I got like the highlighted one a couple weeks ago. I'll tell you how I got it. Banks don't lend money to people who need it. That's really the secret. If you understand that, like how they make money, they don't make money off of poor people. Like they don't. What they want is a rich person who doesn't manage their money, right? And a lot of people think, oh, making lots of money means you know how to manage it. Not really. Not really. It just means you make a lot of money. I mean, think of all the rich people you knew back in the day. Like, let's say there were kids of rich people. Maybe their dads were like the first generation. What happens to second or third? Probably goes away. The wealth goes away, right? Ever hear that? Like, oh, wealth goes away by the third generation. So having lots of money and the managing of that money are kind of like two separate things. You gotta like divorce yourself from that. But if you understand, and if you're a bank, you realize that people who have lots of money don't need it are your best clients. And then you're secretly hoping they don't pay you off early, right? Remember that. Banks don't lend money to people who need it. And that's why I have, if you sum this up, like I have all this, it's $731,000 in lines of credit because I understand what they're looking for. And see, the reason why a lot of people, and I know I'm going off on a tangent here, but that's what happens when you pay off your mortgage in 2 years and 9 months. You just go on rants and you don't really care about teaching this stuff because, it's kind of like I said before, trying to teach people about drinkable water in a country where there's drinkable water everywhere. That's kind of like my mindset right now. I paid off a mortgage in 2 years and 9 months. Oh, who cares about debt payoff yet? I know for some of you looking at this and then thinking that I'm very ungrateful, but that'll happen to you too. Um, anyways, so $731,000 in lines of credit. I forgot my train of thought because I was just like, this is what I mean. Like I'm very bad. I'm getting worse at teaching this. Okay, 731,000. What am I even talking about? But anyways, so if you want to know how to get this, just remember that banks don't lend money to people. Oh, I remember my train of thought. Okay, so why is it that most people can't get these lines of credit? And I'm going to give you my honest answer is because they're incredibly selfish, right? So here's like most people's mindset. Oh, geez, someone's calling me. I'm getting interrupted. Oh my goodness, I just realized I'm at that 14-minute mark and I didn't even really even do velocity banking. It's okay. Yeah, but that if you want to watch it, just watch the 1,000 other videos I posted. But I'm going to tell you something. You want to know why most people can't get lines of credit? It's because they're incredibly selfish. And what I mean by that, they think that if the bank makes like a couple bucks off of them, that's incredibly bad. Yet ironically, these people will get 30-year mortgages and let the bank get twice the value of their home over a lifetime. So That's why a lot of people can't get lines of credit because it's like, well, if I even give the bank one penny, that's so bad, especially when times are good, right? And then they always try to get the money when they need it. See what I'm saying? Like you do you understand what I'm talking about? Like most people can't just go to a bank, give them a couple bucks and say, "Hey, I'll give you like, let's say 3 grand, you give me 380,000 to work with, right? You understand that? Like, you let the bank make a little bit of money, just don't let them make too much money, at least off of you, right? And so that's why a lot of people can't get lines of credit because they're selfish. Like they can't. You know why I get it's all these lines of credit? Because I don't need money and I'm willing to pay a couple bucks to the bank for access to money, right? And again, that I didn't pay for all of them. In fact, my previous home equity lines of credit were for free, or I didn't have to pay anything, and the only thing I was paying was the interest. But there's some where I actually paid money to for underwriting and all that, and I didn't even mind because the best credit decision is not the best financial decision. All right, so oh man, so getting so bad at teaching this. All right, so let's do this. We're going to assume we have a $120,000 line, free and clear line of credit. Will we get a free and clear line of credit at this stage? No, $67 left over. We're definitely not. But what we're going to do, the reason why we teach, hey, let's assume you had a free and clear line of credit. It's kind of think of this as your safety belt, if you or your car insurance, when you crash your car, right? But the thing is, they're never going to give you car insurance when you crash your car without insurance and then you try to get it. But that's what the bank sees when you try to get a line of credit at this stage, right? So you always got to get it before you need it, right? It's all a risk management game. Risk management, okay? So, what we're going to do is we're going to have this number called cash flow, which looks exactly like your savings in the beginning. But once we move some of our debt into the line of credit, we're going to use this as our main operating account, right? So, how much debt is this? It's 30, 35, 15, 27, and I'm going to sum this up. This is going to be $107,000 in credit card debt that we're going to shuffle, right? And what we're going to do is use something called the cash flow index to kind of determine the debt payoff. So what does that mean? Basically, you pay off this debt, you get more bang for your buck. Like, would you pay $500,000 to get $2,600 of your cash flow? Or you could pay off two credit cards and get almost the same amount, right? Like, which one gives you more bang for your buck? I'll pay off these credit cards. So the cash flow index has a indirect correlation with the interest rate, but the formula is balance divided by payment, right? So we want to get the much payment as possible. And then what we're going to do is when we move that debt, I mean, take a look at this. All right. For credit cards, whoa, how do we have the same income but not save money and then increase our cash flow to 3,597? And then this is the final step. Okay, I'm going to show you the final step, which is you put your entire paycheck into that line of credit. 13 grand does two things: satisfies the minimum monthly payment, lowers the average daily balance, and then you take out the expenses, and then you rinse and repeat over and over again. Okay, rinse and repeat over and over again. So what we're going to do is get the next month's balance, which is based on the previous month's balance, previous month's interest, and then 3,597, which is our cash flow. That's the amount that's going to be used to reduce our debt. And then what we're going to do is take the average daily balance, multiply by the interest rate, divide by 12, right? That's the basic interest cost formula of the line of credit. And look at that. Oh my goodness. We were so worried about $67 being able to save that up. And then here it's like, oh, we can breathe, right? I can breathe. You know how many people there are where it's like they feel like they're choked up by their debt? I don't know why I was so afraid of banking. Just dump your entire paycheck into the line of credit, and then when you need money, take it out, right? See how easy that is? Oh my goodness. I just cannot believe how easy this is. And so in 33 months, we paid off 170K, 107K, yeah, 107K in lines of credit. And so what we're going to do, right? So if we take a look at this, is I just want to show you something, right? So average credit card debt is only about 6 to 7,000 per person, which is crazy because like I'm 6,400. Everyone's like freaking out about this. They're freaking out about their student loan, and then we're dealing with $107,000. Obviously, we have the income to support that, but the bank ain't gonna give you $107,000 in credit card debt unless like unless you have money, right? So that's why like the average credit card debt's only like 6 grand, and I know like for some of you like 6 grand that's so much, and I'm like, wait till you become a size queen like me. Wink, wink. No, just kidding. I gotta stop saying that. I don't know why I like that joke so much. It's that's what a cult leader does. We laugh at our bad jokes. So here we go. Now 33 months, and then now we have the auto loan, student loan, and the mortgage, and you see how these are like higher end products. So auto loan 70,000. I don't know what kind of car you get for 70,000. Can you get a BMW or Mercedes? Is that like a 7 series? Yeah or no? I don't even know, but I know that a new truck costs like 90,000. Get a new truck, you're effing rich. Okay. Okay. All right. So we got these three loans, and then we got we just put in the current month, which is 33. And then you see here, this is the latest cash flow index, which is just again ranking system, lower the number, you want to get more bang for your buck. So even though this is a 3% loan, pay this off first and get $1,200 of cash flow versus this, right? So let's go ahead and move this into the Z line of credit, which I will do right here. And then this is going to be plus 32,800.39. And then I'm going to go ahead and do this. This is 0. And now auto loan paid off for $4,000 of cash flow back in my life. And then this is going to be minus 48554.81, right? And then we see right here in 40 months it's all paid off. Okay, so just easy. 40 months. So 107 plus 70, 177. And then in 40 months, okay, so this is going to be 40, 40, right? This is 0, 74 grand left in our student loan. Let's pay this sucker off. And then now, control paste, plus 74056. Get this sucker paid off. And then now we got 6 grand of cash flow in our life. So we do this right here, control V, blah, 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 blah. All right, so 6015.89. Okay. And then this is 53 months. So 53 months, this is all paid off. Right here, 53 months. And then this is going to be 277K. And then now 53 months, this is all paid off. All right, so now what do we do here? Well, let me tell you something, okay? If we, even though this has a high cash flow index, we don't necessarily want to pay it off or move the whole thing into a line of credit. Actually, let me re-explain this. If we move this whole thing into the line of credit, especially if there's a big interest rate difference, it's going to be a mistake, usually, right? But at the same time, we don't want to not pay it off, because not pay it off, which is the 360 month, means that we have to pay $466,000 of interest. So $500,000 loan, $466,000 of interest. So you're paying like double the house over a 30-year lifetime. Now, I know people say, well, I could do better in the market. And then when I see all the people, all the videos of broke people who bought houses because they simply overpaid, you know, I don't, maybe I'm wrong about this, but I just feel like paying off a house is a very safe bet, right? It's a very safe bet, because if you pay your mortgage, then it's like you're going to pay double. Or if you don't pay off your mortgage quickly, you're going to pay double, right? So that we got to be careful of that. So let me go back here. $464,000 balance. So what's the easiest way that we can just pay this off? Well, if we move the whole thing, we're going to pay more interest than necessary into a line of credit, especially if there's a big difference. Now, 5 to 7 isn't that big, but once you get to 2s and 3s, and I know a lot of people with 2s and 3 mortgages, and you move it into like a 10% line of credit, oh, you're going to feel the pain. And I've done videos like this before. Just type in first lien HELOC in this channel, and then you'll see a bunch of demonstrations of me talking about this. But an easy way is just do chunking, just do small amounts. So even if you use a 30% credit card, and you see this right here, I put in all the details, right? Let me do a 30% credit card. You see that you only pay $10,000 more in interest, okay? And then, so isn't that crazy? But if you do a first lien HELOC, which is promoted on the internet, you pay a lot more than a 30% credit card. Isn't that crazy? So what you do is you want to do small chunks, put it into the line of credit, rinse and repeat over and over again. And by the way, if you don't know where I got this from Renata. So if you want to access to this calculator, I get some commission if you want to register for some courses. And I'm really upfront about that. You pay attention. No pay equals no pay attention, right? And a lot of people just want this and like, no, 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 no. I don't think you understand the rules of my cult. You got to pay, right? And me as you know a what did people call me? A faker who doesn't do any of the things that I talk about, but copy and paste doctored images. Um, I'm really excited about the whatever commission I get for selling Renatus products. Wink, wink. Um, what are we even talking about? Anyways, but yes, pay me and join my cult. I'll be that blunt. And there's no guarantees. No guarantees of success. All right, so what am I talking about? 5.5 year, 5.1 years. So let me just do this right here. And it'll be 53 divided by 12 plus 5.1. And yeah, 9.52 years debt free. Debt free. Okay, so yeah, that's where we are after pay off all our debts under 10 years and we're debt free. And now we got a lot of money that we can splurge on and buy not just one or two. You could buy two Nintendo Switch 2s if you have this much money coming in left over in your cash flow. And then this will actually go into your savings account. And then now you can blow it, right? You can blow it. Right. This is probably one of the worst velocity banking demos I've done in a while. And the worst part is this is just I'm telling you, the more better I get at this, the less seriously I take it. Like that's really me and my mindset because you know, you have income coming in here, you have income coming in here, right? You buy real estate at a discount here, maybe set up an Airbnb and make 5 grand a month. Ooh, did I really do that? Yeah, I think I did. But that's the other thing too. Once you experience this, it's like, did I really do that? You almost become like Urkel. You know, what's his catchphrase? Did I do that? Right? And then, what's his face? Carl Winslow will say, "Go home, Steve." But I can't do his voice because he has a very particular voice. Even though Key and Peele did a great job um, of imitating Carl Winslow. Anyways, all right. Well, that's it for today, folks. Crane Lanta Mentorship. I know that the remake of Naked Gun is actually coming out today. I'm thinking, should I watch it? I heard it's really good. So maybe I will watch it later today. Have a great day, everybody. And if you want the secret code, I'm just making it up on the fly. And what I mean by the secret code, the code that lets me know, or the comment that lets me know that you watched till the end of this video, right? Because I know some of you are out there wanting to let me know that, hey, I watch this stuff religiously and I'm dedicated and I want to be debt free. So if you want to just kind of write a comment below to let me know you watched till the end of this video, um, just type in "Did I do that?" And maybe you do the voice too with Urkel. Did I do that? And maybe yeah, did I do that? Pay off a mortgage in 2 years and 9 months. All right, well, that's it for today. Oh man, I'm doing a terrible job. Maybe need to get my act together. All right, well that's it for this beautiful Thursday. Tomorrow is August. Can you believe it? All right, we're at the 28-minute mark actually. Have a great day, everybody, and I'll see you on the next video.